I'm not a Bitcoin hater. I've read the papers Roman has. I'm familiar with it. I think the technology's cool. The encryption's cool. I like open source. So I say go for it. I don't own any. I don't recommend it to clients, partly because it doesn't have the kind of track record that I look for when I want to allocate wealth. At the end of the day, you don't have to trust anyone to find your value in gold. And Roman talked about Bitcoin being kind of outside the power of the state. That really is wishful thinking. The state is watching, they're waiting for you, they control the portals. You probably, if you're a Bitcoin user, you're probably a tax evader. And last time I checked, the state runs the power grid, and good luck with your Bitcoins when the power goes out. I have a number of problems with Bitcoin. Number one, if you ask somebody what a Bitcoin's worth, they'll say it's worth $500 or $200. Well, I said, wait a second, you're talking about dollars. Now, even the dyed-in-the-wool Bitcoin advocates will express the value in dollars. So I'm saying you're really tied to the dollar standard whether you like it or not, number one. Number two, people don't understand the tax aspects of it. If I buy a Bitcoin for $200 and I cash it in for $300 of goods and services because it went up, I have to take the 100 difference and put it on my tax return as a gain, no different than if I bought IBM and sold it at a profit. I've got to report the Bitcoin gain. Well, I dare say no one's doing that, or practically no one's doing that, which means all the Bitcoin users are tax evaders. And the other thing is people think Bitcoin is cool because it's a digital currency. The dollar is a digital currency. You and I may have a few bucks in our pocket when we walk around, but credit cards are digital. Payment online is digital. Electronic bank account, wire transfers. The treasury market hasn't had a paper treasury certificate since 1982. I think what's interesting about Bitcoin is that it's a kind of currency. It's a store of value, although it's got a lot of volatility. But it's also a technology. I think Bitcoin may be like the Neanderthals in the sense that the currency itself goes extinct the way the Neanderthals did, but the DNA lives. I think the technology might be useful for a lot of property transfers, not just the Bitcoin currency. Get yourself a Bitcoin chart. Of course, it's going vertical right now. It's going from $1,000 per Bitcoin to $2,000 per Bitcoin in I think a week or less. But go get a NASDAQ chart from 1998 to 2000, and go get a Nikkei 225, it's Japanese stock index chart from 1988 to 1990. So, and take the Nikkei chart, the NASDAQ chart, and the Bitcoin chart, and overlay them. It's the same chart. They look exactly the same. Bitcoin is a form of money. I have no quarrel with that. It's definitely a form of money. And when people say, the price of Bitcoin is $2,000 or $3,000, it's not an investment. It has no yield. When you buy stock in a company, you can analyze the company. How's the management? How are the assets, et cetera. When you buy a bond, you can analyze the bond. What's the interest rate? Who's the issuer? Creditworthiness, inflation. You buy real estate. There are ways to analyze all these things. Bitcoin is just money. A Ponzi with no one in charge. But here's the thing.
A Ponzi with no one in charge.
There's no Madoff, but it's working that way. A couple of things on Bitcoin. First of all, a large percentage of the transactions are things that, at best, we're talking about drug dealing, tax evasion, money laundering, and arms dealing. At worst, things I don't even want to mention, more reprehensible than that. So that's what a lot of this Bitcoin economy. So these, morally and ethically, you have to ask yourself: is that the economy I want to join? Bitcoin could go to 20,000, it could go to 30,000. It's on its way to zero, somewhere between 0 and 200. It's a utility token for criminals, terrorists, money launderers, tax evaders. They'll always find some use for it, so it may not go all the way to zero.
And why are you skeptical of the price transactions?
A couple of reasons. Number one, there's pretty good evidence that there's a lot of fraud going on. Look, every market in the world, gold, silver, stocks, bonds, LIBOR, exchange, every market, you name it, they've all been subject to manipulation. That's why we have all these regulators. That's why we have the SEC, and that's why the stock exchange are regulated, et cetera. Are we supposed to believe that Bitcoin is the only market in history that's not manipulated? That's nonsense. Of course it is. In fact, the fact that it's unregulated is a magnet for all the manipulators who probably were, the Wolf of Wall Street, 20 years ago. So the point is, imagine the following. You and I are Bitcoin miners, right? So I sell to you at 10,000, you sell back to me at 10,100, I sell back to you at 10,200. We just traded back and forth all day. There's no P&L. We're trading the same Bitcoin back and forth, but it's called painting the tape. These exchanges get reported on the Bitcoin exchanges, so an outsider who's completely naive about this is, oh look, the price is going up. It's just you and me painting the tape. It's the oldest, the oldest fraud in the book. So there's no way the Bitcoin industry is going to be allowed to use as much electricity as the country of Japan, but that's how much you need to mine the Bitcoin. So they're going to hit a wall in terms of total Bitcoin output. At that point, the miners have no incentive to mine. So who's going to validate the blockchain? Oh, they're going to charge a fee? Well, fine. That sounds like Wells Fargo. That's what banks do. So where's the advantage at the end of the day? So intrinsic value is meaningless. What does matter is subjective value. And that's true of Bitcoin and gold. So when I see Bitcoin at $11,000 an ounce or whatever, that's somebody's subjective valuation of what it's worth. Leaving aside the fact that the price is manipulated, that's a separate issue. But the point is, subjective value is based on confidence. It's a liquidity preference. If you're willing to transfer your hard-earned dollars to get a Bitcoin, you're expressing a liquidity preference for a different form of money. But confidence is fragile. It can be very easily lost, and when it's lost, it's impossible to regain.
What about Bitcoin? Because that would be, now you're laughing, I don't know why you're laughing. Goldman Sachs says cryptocurrencies are going to zero.
Yeah, not zero. Bitcoin has a use case for criminals at $200 a coin, so I can see Bitcoin going to 200 and staying there. That was where it was before this bubble started. Bitcoin's a dead end as a currency. The speculative bubble we're off the top, and it's going down to $200. Blockchain, or hyperledger, distributed ledger technology, that's the future. I just want to say on the subject of Bitcoin, I have been talking about it, writing about it, debating it, lecturing, researching it, you name it, since 2013. And I've said one thing all along. It has no future. It has no use case. It's a bubble. It's very clear. Now, did it go up to $20,000? Sure it did, but that's what a bubble is. That's what you expect from a bubble. But it's come down. It's crashed almost 70% since then. This wasn't a lucky guess on my part. I use complexity theory, I use Bayes' rule, I use history, I use a lot of things to be able to make forecasts like this. So I saw it coming way in advance. If you bought low and sold high, good for you, but all you did was take money from some sucker who bought high and now they're wiped out. So no wealth was created, it was just moved around. But I saw it as a bubble from the start, and now that it's played out, now it has come true.